Welcome back to Smart Stock Sam, and if this is your very first time landing on this channel, I need you to stop whatever else you are doing right now, because what I am about to break down for you today might genuinely be the most important market update you watch this entire season. The entire valuation model for neocloud stocks has been rewritten, not adjusted, not fine-tuned, completely rewritten from the ground up. Billions of dollars in new contracts have been announced. The way institutional money thinks about power capacity as a hard asset has permanently shifted, and a very specific group of stocks, the exact ones we have been tracking here on Smart Stock Sam, is undergoing a structural re-rating that changes the math for everything that comes next. Now here is the question I want you to hold in your mind as we go through this entire breakdown together. Is it actually possible that we are standing right now at the edge of the single most explosive week in AI infrastructure trading of the entire year, with a binary event just days away that could send all four of these stocks moving simultaneously? I'm going to make the case that the answer is an emphatic yes. By the time this video ends, you will have the exact entry zones, the specific price targets, and the one calendar date that could define the next major chapter of this trade. But before we go anywhere, I have to take you back to May 20th, because a prediction I made right here on this channel came true in a way that I think earns this entire framework your full, undivided attention. 5 days ago, I posted a warning video telling you not to buy 4 specific AI infrastructure stocks. Not yet. I said the Nvidia earnings event was a binary fork in the road for this sector. One direction meant validation of the entire bull thesis, the other direction meant the foundation cracks. I gave you specific price levels to monitor, exact entry zones to wait for, and support levels that would tell you whether the big money was still behind this trade. And then the market moved, and it moved exactly the way we mapped it. Applied Digital erupted 21.5%, blasting clean through our $45 target and closing at $48.57. Nebius Group hit our $220 price target with a precision that still feels almost surreal. To the cent, on the May 21st, close. CoreWeave defended the $98 support level I described as a fortress and bounced right off it, and IREN held its 200-day moving average like clockwork before surging higher into the week. Every single call, every single level. That is not luck, and I do not say that to celebrate. I say it because the system is working, and that same system is now pointing to the week of May 26th through the 29th as the next major inflection point. So let us build it out from the foundation. The speculative phase of the AI trade is over, done, finished. The era when a stock could rip 10% simply because an executive mentioned artificial intelligence on a quarterly earnings call. That era ended the moment Nvidia's numbers dropped on May 20th. What followed in the market was textbook and surgical. Institutional money did not flow toward ambition or storytelling. It flowed toward execution, toward companies with infrastructure already deployed, with power capacity already contracted, with revenue already locked in via signed multi-year agreements. Goldman Sachs, Vanguard, and BlackRock began rotating capital into the specific names that could show proof of work at real scale. And that is precisely where Applied Digital and Nebius Group started pulling away from the rest of the field. While the broader technology sector was whipping back and forth without direction, these neocloud names were being repriced on the basis of multi-billion-dollar backlogs built from real contractual obligations. Underneath all of that momentum, there is one hidden metric, one specific number sitting inside these stocks right now, that is coiled so tightly it has the potential to ignite a move we have not seen in this sector in years. I am going to show it to you. But first, I need you to understand the macro engine underneath all of this, because without that context, the tactical levels I give you later will feel like arbitrary numbers pulled from thin air. They are not. They are grounded in the most powerful supply-demand dynamic currently operating in any sector of the global economy. If you want to truly understand why these companies are worth billions more than they were just 6 months ago, you have to look at the Nvidia H100 GPU rental market. Rental pricing on the H100 has climbed 20% year-to-date. In virtually every other industry, a price increase of that magnitude causes demand destruction. Customers walk away, look for alternatives, or delay purchasing decisions. In the AI space, this price hike is doing the exact opposite. It is accelerating demand at a pace that defies conventional economic logic. And it keeps accelerating because the cost of not having GPU access is even higher for the companies competing in AI. These neo-cloud providers sit directly in the path of that dynamic, capturing the margin on every rental, and the world's largest asset managers have taken notice in a way that is impossible to overstate. Goldman Sachs did not take a modest new position in Applied Digital. They increased their existing stake by 466%. 466. Vanguard increased its CoreWeave position by over 275%, building a holding now worth $2 billion. When institutions of that size are making moves of that magnitude, it is not a vote of confidence. It is a statement that the structural floor for these valuations has been permanently relocated higher. But now I need to show you the single biggest threat sitting in the way of this entire bull thesis, because if you do not understand the bottleneck, you cannot understand why the companies that have cracked it deserve the premium they are now commanding. The most critical constraint on AI infrastructure growth today is not chip availability. The chips exist. The bottleneck is electrical power. The modern AI data center is an extraordinary consumer of electricity, and the traditional grid is simply not engineered to service that demand at scale. Utility companies are rejecting interconnection applications from data center projects because the queue for grid access stretches years into the future. This is the wall. And the companies that have figured out how to build their own power supply, to stop depending on a utility company entirely, are the ones now commanding an infrastructure premium that the rest of the sector simply cannot access. Nebius Group just answered the power question definitively with a $2.6 billion deal with Bloom Energy, bringing on-site hydrogen fuel cell technology directly to their facilities. They are generating their own electricity adjacent to their own compute infrastructure on their own schedule. Applied Digital is solving the same problem from the thermal side, deploying direct-to-chip liquid cooling systems for Nvidia Blackwell GPUs, technology that allows them to run dramatically more compute density per square foot by eliminating the massive power overhead of traditional air-cooled data center design. These are not software companies wearing infrastructure costumes. These are serious industrial operators solving real physical constraints at enormous scale, and that engineering moat is exactly what institutional capital is now willing to pay a structural premium for. So let us get into the individual profiles for each of the four stocks, because understanding exactly where each one sits on the risk-reward spectrum is what separates a structured, confident position from a poorly understood gamble. Applied Digital is what I am calling the squeeze leader of this group. They just executed a $7.5 billion 15-year lease agreement for their Polaris Forge 3 campus. Total contracted revenue now stands at $31 billion, and I want to be very clear about what that means. Contracted, signed agreements with real counterparties backed by legal obligations, not an optimistic projection built on spreadsheet assumptions. They secured a $300 million credit facility led by Goldman Sachs specifically to fund continued build-out. The RSI sits at 66.7, neutral bullish, not even approaching overbought territory despite the recent surge. And then there is the number that keeps short sellers awake at night, short interest at 35.28%. Is it actually possible that if Applied Digital clears its recent high of $48.57, those short sellers get caught in a covering panic that sends this stock barreling toward the $66 to $70 analyst price targets in a matter of days? Based on the setup, I believe that outcome is considerably more probable than most investors currently appreciate. CoreWeave is the heavyweight of the group, $100 billion in contracted backlog, a freshly secured $3.1 billion term loan to continue buying GPUs at scale. The growth rate is historically unprecedented for an infrastructure company of this size, but I have to be direct about the risks sitting inside this name. Insiders have sold nearly $2.9 million of shares within just this week alone. A new $5 billion venture between Google and Blackstone is now competing directly for the same enterprise AI infrastructure customers. The put-to-call ratio on CoreWeave sits at 2.45, which tells you that sophisticated options traders are actively purchasing downside protection at elevated levels. If you are long CoreWeave, the $100.22 support level is your hard line. A sustained break below that number changes the risk profile dramatically and quickly. IREN Limited is the most misunderstood opportunity in the group by a wide margin. They are executing a full-stack transformation from Bitcoin mining into pure AI cloud infrastructure, targeting $3.7 billion in annual recurring revenue by the end of 2026, with $3.1 billion of that total already contracted and signed. They even made the bold move of acquiring a creative agency called Awaken to lead their global rebranding campaign, which tells you everything about how seriously management is treating this pivot. The monthly chart shows a textbook bull flag formation, with the 200-day moving average at $50.98, serving as unbroken long-term support through all of the volatility. As long as that level holds, the technical path of least resistance points higher. This is your steady, lower volatility entry point into the AI infrastructure theme, the Goldilocks setup of the four. And then there is Nebius Group, the margin leader, and frankly, the most jaw-dropping fundamental story in the sector. Their Q1 revenue surged 684% year-over-year, reaching $399 million, and they are achieving that growth with a 45% adjusted EBITDA margin. They are not just growing rapidly, they are growing profitably, which is extraordinarily rare at this stage of a technology platform's development. Their potential backlog extends to $46 billion, anchored by deep relationships with Meta and Microsoft. Citigroup just placed a $287 price target on the shares. The only friction in the story keeping retail investors cautious? The chief infrastructure officer recently sold $101 million in shares. Red flag or rational profit-taking after an extraordinary run? That is the debate sitting underneath this stock, and it is the single biggest reason Nebius is not already trading above $300. Here are the exact tactical levels that define your positioning for the week of May 26th through 29th. These are your goalposts. For Applied Digital, you want an entry between $44.50 and $45.50, with a price target of $55. For CoreWeave, $100.22 must hold as support. If it does, the target is $120. IREN has a clear technical path to $70 as long as it remains above $51 on a closing basis. And Nebius, if it breaks through $233 of overhead resistance, the next significant target is $250. These are not guesses. They are built on high-volume price nodes, historical support, and resistance clusters, and where institutional order flow has been absorbed in recent sessions. The options market adds one more layer of precision to this picture, and it is pointing very clearly at one name. IREN currently has 9,980 call contracts open at the $59 strike price. In trading, we call that an options magnet. Market makers who sold those contracts are mathematically required to buy the underlying stock as price approaches that level in order to hedge their exposure, creating a mechanical gravitational pull toward $60 that operates independently of any fundamental catalyst. Could IREN actually be pulled to $60 purely by market structure mechanics before the end of May? The positioning says it is not just possible, it may be the path of least resistance for this name. CoreWeave faces forced institutional buying pressure from the approaching Russell 3000 index inclusion, which compels passive index funds to purchase shares regardless of price. Applied Digital has that 35% short interest sitting like a compressed spring under the recent highs. And Nebius is holding its breath for the announcement tied to the Bloom Energy fuel cell project going live. 4 stocks, 4 distinct independent triggers. Any one of them could fire in isolation. If more than one fires in the same week, that is when sectors make their biggest, most memorable moves, synthesizing all of it. Applied Digital and Nebius are your highest conviction plays on pure near-term upside potential. APLD has the short squeeze mechanics, and NBIS has the margin profile that institutional analysts cannot stop writing upgrades about. IREN is the Goldilocks setup, cleaner risk-reward balance, a rebranding narrative that the broader market has not fully discovered yet, and a chart that wants to resolve higher. CoreWeave demands the most discipline in how you size and manage the position. The upside is real, but that elevated put-to-call ratio is a message from the smart money that you should not ignore. The single common thread running through all 4? Execution, power infrastructure, real contracts. That is what this market cycle rewards, and that dynamic is not shifting anytime soon. Now, here is the date that matters most for the week ahead. May 28th. Dell Technologies earnings. If you are asking yourself why a server company matters for AI infrastructure stocks, here is the answer. Dell is the primary supplier of the server chassis, GPU rack systems, and liquid cooling infrastructure that all 4 of these neocloud companies depend on to physically scale their operations. A strong Dell report, and more importantly, strong forward guidance confirming accelerating enterprise AI server demand, is the final confirmation signal that the AI infrastructure build-out is moving faster than even the most optimistic institutional models currently project. It could be the catalyst that triggers a re-rating across all 4 names in a single trading session. That is the binary event I have been pointing toward all video. Write down May 28th. Keep your stop losses set and your position sizes disciplined heading into that number. Before I give you my final thoughts, I want to be fully transparent with you, as I always am on this channel, about the legal reality of everything we have covered today. Nothing in this video is financial advice. I am a content creator sharing market analysis, not a licensed financial advisor or registered broker. Every price target, entry zone, support level, and tactical call discussed today is based on technical analysis, institutional flow data, and publicly available information as of May 24, 2026. Markets move fast, and conditions change without warning. The stocks discussed in this video, Applied Digital, CoreWeave, IREN, and Nebius Group, all carry real and significant investment risk. Elevated debt loads, insider selling activity, aggressive competition, and high short interest are all factors that can move rapidly against a position. You can lose money, including all of the capital you invest. Please conduct your own due diligence. Use stop-loss orders at levels appropriate to your own risk tolerance. Size your positions according to your own financial situation, and never risk capital that you are not fully prepared to lose. The most consistently successful traders in the world prioritize risk management above everything else. I strongly encourage you to do the same. Here is where I land on the week ahead. The speculative chapter of AI is behind us. The execution chapter is here. The companies that are solving the power problem, the ones with real contracted backlogs, industrial infrastructure already in the ground, and serious institutional capital flowing in their direction, are the names that will define the next leg of this trade and the long-term winners of this market cycle. Applied Digital and Nebius Group lead on near-term upside potential. IREN sits in the optimal balance of risk and reward. CoreWeave is the giant to monitor with discipline and respect. And Dell, on May 28th, is the binary event capable of resetting every one of these price targets, in either direction, in a single session. Now, I genuinely want to hear from you, and I want you to think carefully before you answer. Drop your response in the comments below. If Dell's earnings on May 28th come in strong and confirm that enterprise AI server demand is accelerating ahead of expectations, which of these four stocks do you believe makes the biggest single-day percentage move? And what is your specific reasoning? I read every comment that comes into this channel. Your thinking shapes the research I produce, and your perspective matters here. If this breakdown gave you real clarity and a concrete action plan heading into a potentially defining week, please hit the like button right now. It takes 2 seconds, it costs you nothing, and it tells the algorithm that this level of data-driven research deserves to reach more investors who need it. If you are not already subscribed, hit that subscribe button right now so you do not miss the next opportunity. And if you want to take one step further and directly support Smart Stock Sam in continuing to produce this quality of research completely free of charge, send the super thanks. Every single contribution is personally read, genuinely appreciated, and reinvested directly into building better content for this entire community. This is Smart Stock Sam. Stay sharp, stay disciplined, manage your risk above everything else, and I will see you in the next update.